Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, what a day. These are the days that we live for as traders, but it's also the kind of day that can make your brain hurt, and I'm really looking forward to doing this video and going to the beach and getting off the computer. So gap downs are for buying. So that's the general rule of thumb. It's not always going to work, but when you are down 30% in 5 days preceding a 10% gap down open in a sector where the companies are fundamentally strong, it's for buying. So let's just show you put my money where my mouth is. This is me buying the gap down. Had about 45 orders today. I was trading CGC, ACB, CRON, ACB, CGC. And it all started off this morning, 3 seconds into the day, filled at 37.05. 57 seconds into the day, filled at 37.06. So I've instantly bought, knowing that I wanted to add to my position. And just to go over a timeline, so yesterday I ended the day with selling half of my position for profit. Thank goodness I did that. And so I started today with a break-even price of $39.70, and I started the day giving back my entire gain from yesterday's bounce and starting the day in the red. But I didn't bat an eye at that because I knew I have 80% of my position in cash. The RSI levels are still crushed on the 4-hour time frames. I'm absolutely looking to buy this gap down open. So I increased my position 200% with these two orders. That lowered my average into the 38s, and then I just started scaling out slowly. So I scaled out at 37.91, 38.50, 38.93, 39.85, and just like that, it's in the green, and it's a week maker. And for the rest of the day, I can play a little bit more cautious, and I don't have to be too aggressive. Now, when I make these videos, understand that not everybody's trading style is the same, and if you have a smaller capital account and you're trying to, make some moves with it, you can be more aggressive. Absolutely. Where I'm at right now, it's been a fantastic year. And my only goal is just give nothing back and slowly tack onto it piece by piece. And so today, after I made those initial moves and I sold the first 20 minutes of this bounce on CGC first thing this morning because it went way too far, way too fast. So I sold into that. And from there, I just scalp. I did maybe 30, probably not that many, maybe a dozen short-term flips after that move to just slowly tack on to that profit. None of them were major trades, but the biggest number one factor for me was preserve that profit. Don't give back any of the profit that you just made on this move and just slowly add to it. So we were looking for a 15-minute higher low to form after the high of the day was hit. And we pulled back way more than the bulls would like to. And it was the kind of scenario where anticipation worked for the 15-minute higher low. We knew that was the most likely scenario, but it also hurt a little bit because the most likely scenario was a 15-minute lower high as well. So we didn't get that 15-minute lower high. So some people took some profit as, that's a good idea in my opinion. And some people missed out because they were being patient for the lower high and then break at the 15-minute time frame. So it's definitely, sometimes it works, sometimes it doesn't. In that scenario, I was still flipping, even though I anticipated a lower high on the 15-minute time frame to form. When we hit the new high of the day, I still bought in, and I just sold it for 30 or 40 cents more a couple minutes later, and just again one of those quick flips. But you shouldn't feel bad about looking at the most probable setup because it's going to happen more likely than not. Why did it not happen this time around? The S&P 500. So that's also the reason, in my opinion, we started with the gap down open. SPY started extremely weak with the gap down open, but it was a bear trap. So we broke key support on SPY, and then look at the SPY move that we saw on the hourly time frame. Complete V-shaped recovery, ideal conditions for the Canadian MJ sector to bounce. So the 15-minute time frame for SPY gave us the equilibrium that was the most likely scenario for CGC. High, low, lower high, higher low, and the bull break occurred at 12:15. So let's now look at CGC at 12:15, and that's when we would anticipate that lower high to form. But look at the kick up. So there's a kick up in volume and in the size of the candles. And this is CGC responding to the SPY bull break of the 15-minute equilibrium. The entire day, I mean, it's almost looking into my own insight is a way to look into the market and what other traders are thinking. So the entire day, I'm cautious from going extremely aggressive because the S&P 500 is so weak. As soon as that 15-minute equilibrium breaks bullish, the bulls say, all right, SPY low of the day could be in for now. That's a significant shift in momentum. And you can see the confidence on the chart. With this 45-minute move, that is confidence from traders saying, we don't have to worry about the S&P 500 in the short term. Let's get some. And we follow through with the bull break. So it was the 15-minute pattern on SPY developing sooner than it developed on CGC, and then just carrying the entire sector. I mean, the entire sector for this 15-minute run was massive follow through for the bulls. Cron had the biggest one. It was so fun to watch throughout the day because we had, Cron surging to higher highs way above everybody else. And then APH did it as well afterwards. Poor ACB, absolute laggard, but there was opportunity there. So recognizing that ACB was the laggard, again, the mindset of myself as a trader and recognizing what's going on in my head and then applying that to other traders thinking the same thing. I looked at one point today, this morning, just before noon, and I saw these names, everybody's down 6%, 7%, 8%, and I look at ACB and it's down 15%. So I go into the chat room and I say, watching ACB potential laggard play, trying to change the 5-minute 750 key resistance. So let's just look where we were on ACB at that point in time on the 5-minute time frame. And for ACB, it was a real tight equilibrium. It's right here. Let's actually look out on the 2-minute. It's more clear. So on the 2-minute time frame, when I said that, 1150. So I said it right here. And I was watching for this bull break. And this is actually the Canadian ticker, it looks like. But it was a 2-minute equilibrium that got follow through. And once that follow through happened, before this move happened, Cron was by far and away the strongest Canadian MJ name. And everybody responded bullish here. This is when, SPY saw that kick up and everybody else responded bullish. But from this period where the hour after I left that message at 1150 to 1250, this move, ACB percentage-wise, went twice as fast as Cron. So although Cron was the strongest name, ACB was the laggard, and it was down 15% still, and people moved to that name seeing that it needed to catch up. So it essentially made 4% plus gain in this hour time frame, where Cron at that point in time had only made a 2% gain. So recognizing how, again, that's all correlations. The only way that trade played out so significantly and choosing that name for that hour was a good idea was because of the correlation recognition with all of its peers in the sector. So let's do some analysis now. So CGC, let's start on daily time frames. We have to understand that this is an oversold bounce on the hourly and 4-hour time frame. These names are not changing their daily trends anytime soon. I also wanted to give a shout out before I get into it. These tickers, these small cap names, huge bounces. MedMen 25% plus, Fire bounced 25% plus, NBEV, I don't even know what it ended up. It broke 4 and then it went up to 550. Huge, massive bounces. There is more risk and more reward in these smaller cap names. I choose the larger names because I'm playing with larger positions and the capital entries and exits are much quicker. If I can just push a button and, 6-figure positions move instantly, you can't really do that on some of these other names. But if you're looking for more risk and more reward and more volatility, the small names is where it's at. And I'm going to put out my video for the USMJ. Really, it's going to be, I'll just put out that video with the USMJ names I'm going to highlight. And it's more so how to do due diligence and research video as well. I'm going to put that out tonight, so keep an eye out for that as well. Now let's get into the analysis. So we're looking for a lower high on the daily. Right now, for CGC, the last resistance on the daily in terms of a clear high is the all-time high. So anything under that on this bounce is a lower high, and I would absolutely look for a lower high to form in the upper $40 range, best case for the bulls. So in order for the bulls to regain daily momentum, we're going to bounce, set a lower high, and then the bulls have to form a higher low and then change the trend on the daily time frame. So it's a lot of steps in order to change that trend, and it's not going to happen anytime soon. As far as the bounce on the hourly, we got overextended, and we got overextended into the end of the day, and we saw profit taking into the end of the day because some of these names bounced 10, 20% from their lows without all hourly consolidation. So CGC saw some brief hourly consolidation, more so than other names here at 37.25, and they need a higher low compared to 37.25. Anything will do it. And now we're watching, what does this hourly consolidation look like? If it's healthy, like it currently is, and it ends up being a bull flag, we're going to look for continuation tomorrow, and a break of the high of today, 42.38, is going to be a bull signal first thing. If we pull back tomorrow and see a weaker open in the low 39s, the odds of an hourly equilibrium will increase. The more we pull back, the more it's going to take the bulls to try and see continuation. So that means a higher percent chance that we form that tightening range and an equilibrium rather than just straight continuation. At this point, this is very healthy hourly consolidation. And look at this double top. High of the bounce yesterday, 42.49. High of the bounce today, 42.38. That's an 11-cent difference. That's not a coincidence in my opinion. And we have an inverse head and shoulders pattern with the left shoulder, the head, and we're now looking for the right shoulder of hourly consolidation and then a bull break of that double top. Look at the space to the upside. There's another great bull entry to be had on that resistance break if we get healthy hourly consolidation. If SPY bulls, again, look at SPY. SPY overextended on the hourly. We need healthy hourly consolidation. That didn't happen. That was a fluke in extended hours. But it's the same pattern. You can see how correlated we are. This bounce on SPY is very similar to the bounce in Canadian MJ. So do we get the bull flag of consolidation? Does SPY break the high of today tomorrow and get follow through? And if SPY breaks the high of today and CGC breaks the high of today, I'm absolutely going to play that move because of the space to the upside on this hourly time frame for CGC. There's a lot to work with, and we could very easily see another couple dollars of upside after this healthy hourly consolidation. So that's what I'm watching for CGC. Cron, again, anything under 1132 is a lower high on the daily. Not going to change that trend anytime soon. Hourly chart saw a bull move. We established resistance at 888. We need a higher low now compared to the low of the day, and then a trend change. And this pattern's here as well, the inverse head and shoulders. With the left shoulder, the head, trying to form that right shoulder, have to see a bull break of 888, and then we're looking at 904 and then space. So 888, 904, space to the upside, have to break the high of today early tomorrow morning to give the bulls confidence in continuation. Have to see it on SPY as well. And more names now, ACB, you better believe it's going to start correlating to the S&P 500 more than it ever has before because it's now on the NYSE. And I certainly enjoyed trading ACB on the NYSE. My orders filled much faster, and they were better fills than what I'm used to on the OTC with ACBFF. So very simple. I'm going to go over these other names really quickly because it's pretty much the exact same setup. Hourly higher low needed, consolidation a little bit more established and developed in Cron than it is in CGC, but we need to see that continuation tomorrow morning. APH, huge recovery in terms of the bounce. From the low to the high, very significant, but because we ran so hard, it also saw a huge pullback from the high of the day, 1733 down to 1571. We almost pulled back 10% from the high of the day. So it's the same story where we need the higher low and we need the bull break of 1733 for continuation. We've already entered the space with a lack of clear resistances, which is one of the reasons the bulls were able to see so much follow through. As soon as we broke 1643 on APH, that's essentially as if CGC had broken this resistance level from the high of the afternoon bounce yesterday. So breaking the high of the afternoon bounce yesterday, APH bulls kicked it up a notch, but need that hourly higher low and then continuation move to change the trend. We have not changed the hourly trend. We broke the lower highs, absolutely, but the move was coming off the lows, and to change the trend, you need the confirmation move of the higher low and higher high follow through. Daily chart for APH, we're not changing the trend anytime soon. Anything under 2069 is a lower high. TLRY, daily chart, not changing the trend anytime soon. 159.28, anything under that's a lower high. 97 is the most important support. Nice bottom fishing play this morning. We have two lows of 97. It held by 4%, and then the bull showed up in a big way. Hourly chart, need that higher low. Same setup as here. Resistance, 124.40, 123.90. Very similar to everybody else. Left shoulder, head, need the right shoulder, and then the bull break of that double top. ACB, not changing the trend. 1436, anything under that's a daily lower high. Hourly chart, there's that head and shoulders pattern, but you can see we didn't get close to that high. So APH broke the high of yesterday's bounce attempt. CGC double topped, TLRI double topped, and in terms of ACB, we got 4% away. So very clearly the weakest name. We need the higher low, we need the bull break over 1129, I'm probably not going to play it as a laggard from here. I'm probably going to stick to the stronger names and the more clear setups, because I love the fact that TLRY and CGC can break their double top of resistance on the hourly in one move. We're going to break both resistances at once. Whereas for ACB, we would break the high of today, and then we still have to go 4% to break the next resistance level. So it's the difference of taking out two levels at once, as opposed to having to take out multiple levels and take more time and require more volume and more bullish action to do so. So that's where we stand as we head into tomorrow. Again, individual names look for the same thing. All these small caps as well. Fire had a huge bounce. What's the hourly look like? Do we need hourly consolidation? There it is. Low volume. That's great. Looks good so far. Bull flag. We broke the high of the bounce. That's how I can distinguish individual names. If I'm looking at a sector, I can say, okay, names that have broken the high of yesterday's bounce in the afternoon are stronger, and names that haven't are weaker. I can separate them into two groups just like that. That's a lot of talking. I think I'm about done. Keep an eye out for the USMJ video. Have to see continuation into tomorrow, and we take it one day at a time. We have to see how much bull follow through we get, how much bull momentum, what's the overall market doing. That's why I'm a day trader. That's why I don't swing positions often, because everything, all these correlations are changing 100 times throughout the day. They're changing from day to day, and to stay on top of it, I find it's easiest to do the quick moves. Hope you had a good day. Hope some of you got some nice dip buying on the gap down. Hope it's not too much of a red screen in terms of those that have watched profits or their positions drop over the last few days. Again, I don't have insight in terms of the daily time frames and how much more downside are we going to have. I don't predict things. I react to things. So once we see tomorrow, can we break the high of today and break these resistance levels and see increasing bull volume and declining bear volume? Then I react to that. But I don't know if that's going to happen tomorrow or not. I have to see it happen first. So as far as the daily trends go, we're not changing them anytime soon. I know that much. But as the more we bounce, the more likely the bulls can form a higher low and then try and see continuation. If it's a weak bounce, the more likely that we're going to drop down to a lower low at some point in the future. Hope you have a good day. Do a good thing or two.